We think the single most important thing is that we do backstop the industry, and that is paramount. And, we'll do what it takes to do that. But yeah, ideally, other people would be joining in that with us.
That was FTX CEO and co-founder Sam Bankman-Fried earlier this year on the importance of crypto bailouts. But now the current cryptocurrency exchange is looking at being acquired by rival Binance after FTX saw a surge in withdrawals, causing a significant liquidity crunch. Let's get right to our very own David Hollerith here. David. Lisa, let's at MoffettNathanson, Lisa Ellis, good to see you. My apologies on that one. So I know you cover Coinbase at length. What does this mean for Coinbase?
Well, it lays bare. I mean, look, the whole industry is going through a pretty big shakeout right now, and that's, kind of causes tremors across the industry, no doubt about that. But ultimately, what this situation lays bare is that there is a pretty meaningful difference between the sort of security and trust that you could count on with regulated exchanges and the crypto companies that are operating kind of heavily within the regulated ecosystem versus ones that are operating in the unregulated or sort of semi-regulated space, which is what FTX and, for that matter, Binance do as well. So as much as this is painful, will cause a shakeout and causes, some sort of tremors and concern about the stability of the overall industry, ultimately, it will likely mean a flight to quality, which should be good for Coinbase and its more regulated peers.
Is that a flight to quality in platform as well? And which platform would that be? Because I think about a Coinbase, I think about a Robinhood that are watching this mega deal take place and try to figure out what it means for them.
Yeah, well, I mean, one notable distinction, of course, is that with somebody like Coinbase and Robinhood, I mean, they're publicly listed companies. They're regulated by the SEC. They have to have very clear, transparent disclosures that investors pour through every quarter to see what's going on with the balance sheet, how they're reserved, for example. And then also because they're regulated, they don't, for example, participate in the derivatives market, the options markets in crypto. They don't lend, so they're fully reserved. A huge difference here because you can't really have a run on the bank, so to speak, at somebody like Coinbase because they're 100% reserved. They could, if they needed to, cash out every single deposit. And that's so when I say, so there may be technology aspects to the platform, but it's really more about, I'd say, the policies and the procedures that they're following that sort of lend stability and kind of security to the underlying consumer assets.
Lisa, in light of this development, there was some speculation a couple months ago that there could be a Coinbase or a Robinhood tie-up. Does that now have to happen, given you have an FTX and Binance joining forces?
That's a good question. I think we're still in TBD mode in terms. I mean, it seems it is natural that when we're in a crypto winter and trading volumes have dropped dramatically, and these are scale-based businesses that benefit significantly in their economics from scale, liquidity begats more liquidity, et cetera, that we'll see consolidation. There's still something like 300 exchanges globally operating in crypto, and we should definitely see at some point some significant consolidation. But whether that comes in the form of actual mergers, buyouts like we're seeing with Binance bailing out FTX, versus simply volume migrating, to a fewer, smaller number of platforms, and then other ones essentially just shutting down, I'd say is TBD.
With the midterm elections here in the U.S., you could have some changeover to the Financial Services Committee with the House, and that could perhaps have some impacts on the crypto landscape as well, or at least the review, the acceptance of blockchain and crypto-related technology as well. Do you foresee any kind of corollary impact from the midterm elections into what the next few years for crypto does look like?
Yeah, well, I mean, we, as I think many in the U.S. crypto ecosystem, are hopeful. There is a bipartisan bill right now sitting in the Senate that should start the process, at least, of establishing a regulatory framework for the industry, specifically allocating some of the major, very decentralized cryptos, meaning like a Bitcoin, Ethereum, et cetera, specifically under the purview of the CFTC, and then move forward from there. And I think that now that we're through the elections and they can kind of get back to an agenda, this is arguably an area that's an easy win for both parties to demonstrate some bipartisan collaboration. And so, I think we and many in the industry have fingers crossed that they'll go ahead with this first step legislation to kind of pave the way then for further, amendments and add-ons over time. The U.S., frankly, has been falling a bit behind, and we've been, as a result, seeing significant amounts of trading volume shifting offshore to other jurisdictions where the regulatory frameworks are clearer for the exchanges and the ecosystem overall.
Lisa, if I learned anything from covering the Lehman Brothers and Bear Stearns crisis, it's that when you have liquidity concerns at large financial institutions, it takes a while for that to shake out. More near term, the selling we're seeing in various crypto tokens across the board, how long might that continue based on the problems at FTX? No pressure.
I wish we knew that. I wish everyone knew that. Look, the immediate selling, right, that we're seeing yesterday, today, that will tend to happen. People make decisions very quickly, right? Either they're dumping or they're not, or they're moving or they're not. What I think is so it should stabilize here fairly quickly. I think what is uncertain, though, however, as always, as we saw back in the spring with the Luna Celsius situation and Three Arrows Capital, is that we don't really know at this point what the potential knock-on implications are. If there are other exchanges or other entities that had exposure right here. This is part of the problem with these unregulated exchanges offshore. You actually don't know where the risk lies, where exactly, who's holding whose assets. And so, it'll take probably at least a few weeks, like we saw in the spring, right, to sort of see what potential knock-on impacts there may be elsewhere in the industry.
MoffettNathanson Partner Lisa Ellis, thanks so much for joining us on all things crypto this morning. Appreciate it.
Thank you.